We're looking at XP Factory PLC annual report up to the end of 2022, and they're in boom battle bars and they're in escape hunt. And I've been following them for quite a while. And I was actually surprised to see that it's one of my biggest holdings in my pension. I didn't realize, but and I wanted to double check why I did that. Let's look at the numbers. Right, so revenue has gone from 7 million up to 22 million, which is pretty strong. The escape hunt like-for-like sales growth is 24%. I guess Boom wasn't operational for the whole of the year of 2021, so or not under this brand anyway, so it's not applicable. The adjusted EBITDA is up from 0.6 million to 2.6 million. But overall, I think the picture's interesting. Operating profit gone from a loss to a profit of 1.2 million. Their current valuation is about 30 odd million. So they've invested capital, they've got site openings, and they've got a cash balance, and they've got a pretty good customer satisfaction rating. So the Escape Hunt brand, they had 5 new sites open in the UK: Exeter, Norwich, Edinburgh, Bournemouth, and Oxford Street, which is in London. 9.8 million of owner-operated revenue, a 64% increase since 2021, which is very good. It's been a 16% like-for-like sales growth versus H2 of financial year 21, where COVID was no longer affecting the counterfactual. So actually, probably the 64% is not quite as interesting, but still they're showing good like-for-like sales growth. 42% site level EBITDA, that's very, very strong. For anyone that's a fan or who's read Peter Lynch, I suggest you read Peter Lynch's books if you haven't already. Must reading, I would suggest, for any private investor or an investor who's looking to improve their investing or get into investing. Peter Lynch's books are gold dust. Anyway, to quote Peter Lynch, he says any investment that is growing EBITDA above 50%, this is his words, not mine, one should invest everything they have. I'm not suggesting you do that. I haven't invested everything I have in this company, but I have got quite a bit of my pension, about 25% of my pension as it stands, at least the equity side of the pension, is in this one company. And I have to caveat this to say my pension is like most people my age, I'm 39, is very small. It's not hundreds of thousands of pounds, so it's still pretty small. Anyway, 42% EBITDA is fantastic. 35% return on capital is great. Shows they're reinvesting in the business, but 35%, I'll always look for above 25%. So 35% is very, very good. I think a lot of good companies that do well have above 20%, above 25%. Large, massive companies typically aim for kind of 10%, 15% return on capital, but 35 is incredible. Whoopsies, I'm going through a bit quick. Boom is their other brand, Boom Battle Bars, a cool kind of night out. They opened 27 stores, which is good. They delivered 9.5 million of revenue and 1.5 million in franchise royalty, which is great because that's really high margin. EBITDA profile maturing in line with expectations, with the older sites hitting 25% EBITDA, 15% across all units, but a lot of them are new. 97% customer satisfaction achieved versus 8% for the industry as a whole. Look at this revenue growth. It is pretty good, to be honest. The successful integration of Boom Battle Bars has been transformational. Let's have a look what transferred. Look at the revenue growth, incredible, 346%, although 2019 and 2020 and 2021 were obviously COVID, but nevertheless, still very impressive. EBITDA is going up as well. So they're finally looking like they're going to be profitable very, very soon, if not already. Summary of financial statements. This is where it gets a bit tricky. Whoopsie daisies. Let's make me a little bit smaller here so we can see everything. So this is Escape Hunt O&O revenue. Not sure what that is. Operations. Not sure what O&O is. I guess it's revenue 9.8 million versus 6 million in the kind of, there was a bit of COVID in 2021, bit of, still people reluctant to go out as much. But like-for-like growth for the H2 was 16%. Revenue growth in franchise up 100,000. Boom revenue up significantly, obviously, since they've integrated the company in there. Franchise revenue from Boom was 2.9 million, reflecting 1.5 million in revenue, 1.4 as I guess a share of revenue. So that's fantastic. And it looks like EBITDA is going up, although there are some things here as well. So when they talk about pre-IFRS 16 and pre-R&D credits, this, there is some kind of notes here. For the long-term investor, I don't think it makes much difference, but it looks like they are getting some revenue from R&D. In 2021, they had 2.6 million revenue from R&D, not so much this year. There's some 1.4 million in IFRS 16 adjustments. Not sure what that actually means, I'll be honest, but they're using it as a revenue source. So that's kind of interesting. If anyone knows, let me know in the comments. They're adding quite a lot onto depreciation and amortization of some of their assets, I guess. Let's move over to the revenue side. Obviously, it's gone up fantastically well. Gross profit is up as well. It's still the start of the story for this company. So I think what would be really interesting is to see what happens in the next year or two. So let's move on to the next slide. Don't want to get too in the weeds. All right, so sorry, it's jumped ahead. 3.3 million generated from operating activities. 6.3 net investment in tangible and intangible assets. They bought Boom for 7 million. They bought, there's some capex on Escape Hunt, 1.9 million. Capex meaning capital expenditure, which is I guess refurbs and things like that. There's some net cash paid on some other acquisitions, 0.5 million with a balance to be paid for a Cardiff branch. I guess that's Boom maybe. Norwich, 100,000 is paid part of a vendor loan or something. Fit out costs, blah blah blah. Annualized return on capital 35%, very good. Run rate for Q1 of this year is actually above 40% return on capital, which is really what I'm looking for. Really, it's fantastic. Okie dokie. Some more stuff here. I'm not going to worry too much about this year. I think the mature year will be next year. I think it's fantastic to see the general view on this, but I'm investing in the whole story, not just 1 year. So there's some right of use assets. I think that might be franchise revenue. There's some goodwill. I don't like the amount of intangible assets they have on their balance sheet on the right-hand side. It's a warning sign for me. Hopefully that doesn't increase too much over the next few years, because it's often used to make a company look like they have good net assets. For example, if we just have a look at this, 22 million up here, intangible assets, and we scroll down to the net assets, look at this, 21.6 million. You remove the intangibles, which is basically branding and the value of the company to a certain extent, and then they're in a loss of assets. So it's just one thing to be aware of. Obviously, they are buying and renting property and equipment, so that's going up. I don't have a problem with that. I think the right of use assets is something to do with loans and things like that. So I don't see that's, I guess, I don't see that as a negative. They don't have a lot of debt. Loans of 1.5 million for this kind of business that's generating a lot of cash. I think that's not a problem. Obviously, they have lease liabilities, but that's the basically working capital. It's a cost of running the business. Provisions, I guess, is not really sure what that's about, but it might be to do with the new store openings, costs for that kind of thing. Trade payables, again, I'd say that's probably fit outs and things like that. Contract liabilities, likewise, to do with purchasing new sites and things. They're acquiring master franchises in France and Belgium. I guess I don't know if that's like they created. I guess they've created master franchises because they own all the IP, obviously. So I guess they're looking to grow that. I remember a few years ago they had some stuff in the USA. I don't know if can't see that anywhere on this deck, so I don't know if that's been halted, but nevertheless they seem to be doing quite well. Some notes here. They've got a great Q1. Escape Hunt 32% like for like, which is good. Boom delivered 44% like for like, which is great. Yeah, really good. Both brands performing strongly and they're complementing each other. Trading's been ahead of management's expectations, which is always a good sign. Property pipeline in place supports future growth, which is great. Well positions continue its fast growth trajectory whilst delighting its customers. There's some appendix slides here. They've got like good venues, got 46 Escape Hunt and 27 Boom. That's a good number. You know, once they start to, and they're building quite a few stores a year. I think it's like 20 stores a year. So it's not long until they get up to 100, 150, 200 stores. And, you know, more people start to recognize them and everything works, you know. Even, yeah, I think it'll just start to get more and more revenue and things. People traveling, etc., might go to more than one, and you have all those complementary factors kicking in. So they opened 5 Escape Hunts and they opened 18 Booms in the last year. That's 22. And if you think there was only whatever it is, about 50 venues or something, 54 venues to open, you know, to open 22 is like a 50% growth rate in 1 year, which is, or something like that, 40-50%, which is great. You know, I mean, this is kind of what I would hope a lot of my other companies that I invest in start to grow like. But I know, you know, the Kate Boxers of this world only grow, you know, 5 to 10% each year in terms of their store counts. But it's good to see that these guys are, you know, they're aggressive with the growth. There's some reviews here. I'm not going to go into this too much. I'll just move my face. Still got the escape routes and the city hunts and the digital play at home. I think it's really this in-person experience which really is, you know, cool looking. You know, to me it looks fantastic, and you know, I'm nearly 40, but it still looks a lot of fun. Yeah. Here we go, property pipeline. So they're looking at opening up Woking and Glasgow. So in terms of the sites, they've got 2 here that are in the advanced pipeline, Woking and Glasgow. Oh, so here we go. So we have got the franchise sites that they're breaking down. Fantastic. So they've got quite a few in France, which is good. They've got some in Australia, which is good. Norway, and there's some in different areas. Maastricht, I think might be I think that might be Holland, maybe. Barcelona, Lisbon. I didn't know they had Lisbon. I'm a massive fan of Lisbon. I used to live there. I didn't know they had one in Lisbon. That's great. And they've got 2 in the USA. So there's a lot of scope here to grow. Fantastic. And they've got a bunch of others. It's getting much bigger. But currently in progress on the Boom side of things, we've got Dubai, Canterbury, Southend, Newcastle, Loughborough. That, of course, that means owner operated. Shit, I should have known that. Anyway, owner operated in Dubai, Canterbury, Southend, Newcastle, the UK, Loughborough, Cambridge, and Colchester. All of those in the UK apart from Dubai. So that's all good. Hopefully they'll be open. Hopefully they'll all be open in 2023. But so they've got 34 stores in the pipeline, which is great for Boom. Is that it? I know we've got a few more. Whoopsies. So they've got a lot of asset management companies own them. So a lot of people believe in this, you know. They've got a lot of ownership. 31. It's over 50% owned by investment managers. So that just shows the belief in this company. I didn't know that, actually. I did see that they're publishing more shares, which isn't great. I think they said they were going to publish about 20 million shares, which isn't great. It's dilutive for current investors. Hopefully that doesn't go on forever. Review rating, blah blah blah. You know, everyone knows it's good. Although when I tried to organise a Boom evening for my Meta colleagues, I booked for colleagues coming from all over the world. When we got there, they were doing some kind of press opening. They wouldn't let us in. So my rating wouldn't be 97%, but nevertheless, it looks like the public really like them. We've got good ratings on the travelers' websites, and that's that. I'm going to stop sharing my screen now and talk in general about them. What do I think? Well, I don't regret putting that big investment, or big, it's all relative, but big for me, 20% of something like that, 20%, 25% of my share picking pension portfolio is with this XP company. When I looked at it this morning, I thought, shit, I should probably sell some of that. It hasn't gone up that much. Actually, in fact, I think it's gone down by about 20-30% because I bought a couple of years ago when there wasn't so much growth in the company. But having read that, I'm not going to sell. I think it's a really good company. I think it's growing, and it's obviously got the right people. It's got a lot of investors backing it. So you'd imagine, they know exactly how to grow this. And, I don't know how many stores it could probably sustain. I think probably, I couldn't imagine it could have, as many as like a restaurant rollout, but maybe as many as cinemas. Let's have a quick look and see how many cinemas there are in the UK. Number of cinemas in the UK. 860 in 2021. And that seems to be going up. So there are 860. I don't know if that's screens or no, it says movie theaters. So there's 860 movie theaters in the UK. I would imagine it's something like that. You should maybe not as many as cinemas, because like it's probably not as popular as cinemas. So maybe like, what do you think, 20% of that maybe? So that'd be about 160 to 200 stores in the UK. But probably more escape rooms than Battle Boom stores, possibly. I reckon somewhere between 150 and 200 stores in the UK. And in those kind of similar sized markets, Germany, France, Portugal's a smaller country. It's only got about 10, 11 million people. So probably maybe 30 in Portugal or 20 in Portugal, maybe. Something like that. But you could have quite a number of, and in America, I'm sure you could easily have, what do we think? Probably at least a couple of hundred, if not up to 1,000 stores in America. So I think you're looking at maybe a global footprint of somewhere between 1,000 and 10,000 stores. I'm just guesstimating here, right? I'm taking the long view here. They've only got 50 stores now, but if they grow at, between 20 and 50 stores a year, then it wouldn't take long. And I'm sure franchise partners want to grow as well. So, you might get to a point in 5 years where they're growing 50 to 100 stores a year, and then if you take a 10 to 20 year view, you can easily get to 1,000 to 2,000 stores within 10 to 15 years. If they did that, I think they could be valued at quite a bit more than they are valued at now. They're only valued at £30 million, which is probably somewhere in the region of, I don't know, $30 to $35 million. Maybe this is why these investment companies, it's very unusual, by the way, for big investment companies to invest in a micro cap. The other micro caps I've invested in, they don't invest in, so it is quite unusual that some other companies are seeing the value in this company, maybe because it's kind of cool. It's a kind of cool looking company. It's quite sexy and cool. You've got a lot of young people having fun, drinking, playing games, etc. But nevertheless, I do see the potential. Like it's a bit asymmetric in as much as like if it works, it will work very well. And maybe it's worth $1 billion in 15 years, so that'd be about 30x return. Although they are diluting shares, which is, say, it wouldn't necessarily be 30x, it might be 20x. But yeah, let's see. I like the company. Let me know what you guys think. Love to hear from you guys. Are you investing in Escape Hunt, in XP Factory now it's called? What do you guys think? Let me know. Make videos on equities, startups in the angel investment world, property. So check out my other videos. And remember that progress is everything, and knowledge is power. Especially the way kind of knowledge and progress is everything. Kind of messed up that exit or outro, but nevertheless, hope you enjoy this video and my channel. And I'll see you guys in a upcoming video. Take care.